We'll go over 6 books that Michael Burry believes every investor should read. For today's video, we will be going to talk about Michael Burry's 6 must-read books that made him millions. Let's get started. Number 1. Why Stocks Go Up and Down by William H. Pike. The ability to read a financial statement to determine whether a company is correctly valued is a critical skill for value investors. William Pike's Why Stocks Go Up and Down has been a top recommendation for investors to learn this skill for decades. It explains the basics of financial statement analysis, cash flow generation, stock price valuation, and more. Commonly misunderstood terms such as capitalized, equity, and diluted earnings are explained clearly. There is a discussion of stock valuation methods such as price, earning ratio, price cash flow ratio, and enterprise value EBITDA. The book is about fundamentals. It is not about investing or making $1 million in the market. The subtitle, "The Book You Need to Understand Other Investment Books," sums it up perfectly. Number 2. Value Investing Made Easy by Janet Lowe. This book's subtitle is the best way to understand it. Everyone can understand Benjamin Graham's classic investment strategy. While many people consider this book to be too basic to make serious trades, it's worth reading to truly understand Graham's principle without becoming overwhelmed. Financial writer Janet Lowe demystifies value investing and provides simple trading tactics that can help you reap enormous rewards in an easy-to-understand style, peppered with some entertaining stories and quotes. Burry himself ranks this lower on his list because, while it's a great read, it must be supplemented by reading Graham's actual works. This could only serve as a gateway. Number 3. The Intelligent Investor by Benjamin Graham. The Intelligent Investor, a classic book on value investing, is a favorite among the greatest investors of all time. Written by Benjamin Graham in 1949 and updated numerous times since its timeless lesson. Burry has stated numerous times that his investment style is based on Benjamin Graham's writings. Graham famously stated that a market is a voting machine in the short run, but a weighing machine in the long run. Graham explains in this book that short-term prices are determined by an investor's mood rather than fundamental analysis. Burry has stated that this has helped him find undervalued stocks that have risen significantly over the years. And he is not alone in doing so. All of the top investors, including Warren Buffett, recommend reading this book. Number 4. Buffett-ology by Mary Buffett and David Clark. The name Warren Buffett is synonymous with success and prosperity in the world of investing. Burry, like many other investors, learned a lot by following Warren Buffett. Buffett-ology delves deeply into Warren Buffett's investment strategy. The book examines decades of Buffett trades and delves into the lessons that can be drawn from them. While Buffett began investing using the Ben Graham method, buying a lot of cheap companies, his partner Charles Munger persuaded him that it was better to buy good companies with high potential rather than cheap companies with high potential. Buffett significantly outperformed Graham with the assistance of Munger. The key realization was that if you only focus on getting something for the lowest possible price, you will end up with bad companies in your portfolio that will never realize their value, or worse, will see their value decline over time because many of these low-cost businesses are low-cost for a reason. If, on the other hand, you buy a great company with a long-term competitive advantage, or what Buffett refers to as a consumer monopoly, and that can consistently compound its returns at above average rates. Because such a company's value will steadily increase over time, the price you pay becomes less of an issue. In Buffett's own words, time is the friend of the wonderful business, the enemy of the mediocre. This book perfectly outlines Buffett's development as an investor and how he developed his own philosophies that propelled him to the pedestal he now occupies. Number 5. Common Stocks and Uncommon Profits by Philip A. Fisher. Another book that is highly regarded in the investing world and a personal favorite of Warren Buffett. Burry also has stated in the interviews, that Fisher's principles played a significant role in how he built his portfolio. While Benjamin Graham talks about investing early in undervalued stocks and holding, Philip Fisher's philosophy was the diametric opposite. Philip Fisher's approach, which he lays out on this book, was to find companies that were reasonably priced and expected to grow, and that could also be held for an extended period of time. Fisher's investment philosophy appears to be straightforward. Purchase a concentrated portfolio of companies with compelling growth prospects that you thoroughly understand, and hold them for an extended period of time. He was famously quoted as saying, "The best time to sell a stock is almost never." Motorola, which he purchased in 1955 and held until his death, was his most famous stock pick. Fisher suggested that businesses with a growth mindset be targeted for investment, high profit margins, high return on capital, research and development commitment, superior sales organization, leading industry position, and proprietary products or services. He was well known for conducting extensive research on companies in which he intended to invest. To learn about businesses before purchasing stock, he relied on personal connections, which he referred to as business grapevine, and conversation. Warren Buffett has stated that his investment strategy is composed of 85% Benjamin Graham and 15% Philip Fisher. Number 6. Security Analysis by Benjamin Graham. With yet another book by Graham, we can see how much sway he has over Burry's investments. Graham wrote The Intelligent Investor with the intention of teaching value investing to the general public. Security Analysis, on the other hand, is a more technical book aimed to those interested in learning more about value investing. Security Analysis aims to present important facts about a stock or bond in a way that is both informative and useful to a potential owner, and to reach reliable conclusions based on facts and standards about a security's safety and attractiveness related to its current price range. Warren Buffett has repeatedly praised this book. Burry has stated several times that his investment style is based on traditional security analysis. My stock selection is entirely based on the concept of a margin safety. This book is so low on his list because, while it's worth its weight in gold, it's not a book for even an intermediate investor, let alone a beginner. The advanced concepts require experience to understand and apply, and thus are not suitable for average investor. Which aspect of this subject have you found to be very useful? Please let me know by leaving a comment below, and if you enjoyed this video, please press the like button, turn on the notification bell, and subscribe to Wealth-ology for more videos like this. Thank you for stopping by to watch. See you in our next video. Bye!